Hey everyone, welcome back to Corporate Decoder. Today, HawkEye 360 Incorporated Hawk just filed their quarterly report, and I am seeing a growth story that is absolutely exploding. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company more than doubled its revenue in the first quarter, and its initial public offering brought in nearly $500 million. Alright, let's dive into HawkEye 360 Incorporated's latest quarterly report. The 10Q filing, this document gives us a peek at their financial health for the period ending the 31st of March 2026. Think of it as a quick checkup for the company's finances. First up, the balance sheet. This is like a snapshot of everything the company owns and owes. As of the 31st of March 2026, they had about $490 million in assets. That's up slightly from around $490 million at the end of 2025. They have $106 million in cash and cash equivalents, which is a good amount showing they have money readily available. Long-term assets like satellites and equipment make up a large chunk of their holdings, totaling over $318 million. Now let's look at how the company is performing financially. This is the income statement showing their revenues and expenses. For the first 3 months of 2026, HawkEye 360 Incorporated pulled in about $49.8 million in total revenue. That's a huge jump from $23 million in the same period last year, so they more than doubled their sales, which is fantastic. However, their costs are also going up. Selling general and administrative expenses, which cover things like sales, marketing, and general overhead, jumped from $7.9 million in early 2025 to $18.1 million in early 2026. That's an increase of over 128%. Even with that big revenue increase, the company posted a loss from operations of $5.6 million during the first 3 months of 2026. This is worse than the $2.1 million loss they had in the same period last year. It means that even though they are selling much more, their costs are growing even faster. All in all, their net loss for the first quarter of 2026 was about $9 million. This is a significant increase compared to the $1.6 million net loss in the first quarter of 2025. So, while sales are booming, they are still losing money. This statement shows how ownership and equity have changed. It is a bit complex, but essentially it tracks the different types of stock and what is left over for common stockholders after all the debts and preferred claims are handled. Notably, their accumulated deficit, which is the total amount of losses they've had over time, stands at almost $155 million as of the 31st of March 2026. Here is the cash flow statement. This tells us where the company's cash is coming from and where it is going. For the first 3 months of 2026, they used $3.3 million in cash from their operating activities. That's an improvement from using $7.5 million in the same period last year, which is a positive sign, but they are still burning cash to run the business. They also spent $4.1 million on things like satellites and equipment, which is a bit more than the $3.2 million they spent last year. This shows they are investing in their future capacity. On the financing side, they brought in $20.8 million, mainly from issuing preferred stock. This is a huge difference from the $25,000 they brought in from financing activities in the prior year. HawkEye 360 Incorporated is a company that provides signals intelligence, or SIGINT, to the US government and its allies. They use satellites to collect and analyze radio frequency data, which is pretty cutting edge, especially for defense applications. They also recently bought a company called Innovative Signal Analysis Incorporated, or ESA, which helps them expand into classified data and further strengthen their government ties. Companies have to make estimates and assumptions when preparing their financial statements. For HawkEye 360 Incorporated, their most important estimates involve valuing things like stock-based compensation and figuring out how to recognize revenue. They also have to make complex judgments for business combinations, like the ESA acquisition. This section details the acquisition of Innovative Signal Analysis Incorporated in December 2025. HawkEye 360 Incorporated paid about $166.5 million for ISA. This included a mix of cash, preferred stock, and some deferred payments. The company believes this acquisition will significantly boost their capabilities and expand their market reach, especially with government contracts. This is where they break down where the money is coming from. For the first 3 months of 2026, US clients accounted for about $28.9 million of revenue. International revenue was about $20.9 million. This shows a significant international expansion compared to the previous year. Here we see their contract assets and liabilities. Contract assets are money that is owed to them for work done but not yet billed, and contract liabilities are payments received for work not yet done. As of the 31st of March 2026, they had total contract assets of over $12 million. This table shows their investments in physical assets. They have $24 million in satellite builds in process and $160 million in satellites already in orbit. This goes to show how capital intensive a satellite business is. This section talks about their intangible assets like licenses, developed technology, and customer relationships, which are valued at over $34 million. They also have won $16.9 million in goodwill, which typically arises from acquisitions and represents the premium paid over the fair value of net identifiable assets. HawkEye 360 Incorporated has some debt, mainly from loans taken out around the ISA acquisition. As of the 31st of March 2026, they had about $46.6 million in net debt. Interest expense from these loans has jumped significantly, from virtually nothing in early 2025 to over $1.3 million in early 26. This part of the filing deals with their stock. They have several classes of preferred stock, and as of the 31st of March 2026, their total preferred stock was valued at over $465 million. They also show a common stock deficit, which reflects accumulated losses. This note covers their stock options and restricted stock units. They've granted a lot of these to employees. They've recognized $2.3 million in stock-based compensation expense in the first 3 months of 2026, up from $830,000 in the prior year. This is a significant cost, but also a way to attract and retain talent. Here they discuss how they value certain financial instruments like warrants and deferred consideration that are not traded on public markets. Many of these are classified as level 3 measurements, meaning their fair value is based on unobservable inputs and requires significant judgment. This is a crucial section. It tells us about important events that happened after the reporting period. But before the filing date on May 8, 2026, HawkEye 360 Incorporated closed its initial public offering, or IPO. They sold 18.4 million shares at $26 per S-share, bringing in about $478.4 million in gross proceeds. They then used a good chunk of this money to pay off their outstanding debt and fund a deferred payment related to the ISA acquisition. They also entered into a new $125 million credit facility. This IPO is a massive milestone for the company, providing them with significant capital for future growth. This section is management's narrative explaining the financial results. They talk about their business model, which is a mix of selling data and providing intelligence services. They highlight their focus on government customers and international expansion. They also mention their backlog, which represents contracted future revenue, standing at $285 million at the end of March 2026. Their backlog of $285 million is a strong indicator of future revenue, though they note that a significant portion is associated with contracts that allow for customer termination without substantial penalty. Looking at revenue in more detail, US revenue grew to $28.9 million from $14.8 million. International revenue more than doubled to $20.9 million. This shows impressive growth across the board. The company's net cash used in operating activities improved to $3.3 million from $7.5 million, signaling better cash management as operations scale. Here they discuss market risks like interest rate changes and credit risk. They believe no single customer poses an undue credit risk. This is an important part. Management reports that their disclosure controls and procedures were not effective as of the 31st of March 2026. They identified material weaknesses in internal controls over financial reporting. For HawkEye 360 Incorporated itself, this relates to errors in calculating stock option compensation. For ISA, the acquired company, there were issues with segregation of duties and its general controls. This is a red flag. They're in the process of hiring new personnel and implementing new controls to fix this. They acknowledge it might take time, and it is something to watch closely. Now for the risks. This section is a long read, but incredibly important. They clearly state they have a limited operating history in an evolving industry, making forecasting difficult. They've had losses and anticipate increasing expenses, and there is no guarantee they'll become profitable. Their market is novel, and success depends heavily on government contracts. They also highlight risks related to their satellites, cybersecurity, and reliance on key personnel. The risks are extensive, covering everything from market acceptance and competition to regulatory hurdles and potential government contract terminations. A major theme here is their heavy reliance on government contracts. Changes in government spending, shifting priorities, or even government shutdowns can have a huge impact on their business. This is repeated for emphasis. Their dependence on the US government is a significant factor. Cybersecurity is also a huge concern given the sensitive nature of their data. A breach could be catastrophic. They explicitly mention risks from nation-state hackers and the increasing threat of ransomware. Even after the IPO, they still have significant debt. While the IPO proceeds helped pay down some loans, they also have a new revolving credit facility, and high debt levels can limit flexibility and increase financial risk. An interesting point is their status as a public benefit corporation. This means they have a dual duty to balance stockholder interests with a specific public benefit, in their case, preserving the safety and security of the US and its allies. They admit this dual focus could sometimes mean prioritizing the public benefit over maximizing short-term profits for stockholders. They are also an emerging growth company and can take advantage of relaxed reporting rules. While this can save costs, it might make their stock less attractive to investors who prefer more transparency. Here, we see the exhibits filed with the report. These are supporting documents that provide more detail on various aspects of the company's legal and corporate structure. We'll skip over most of these as they are standard for filings. Finally, the certifications. The CEO and CFO sign off confirming they've reviewed the report and believe it is accurate to the best of their knowledge. However, remember those material weaknesses in internal controls they reported. This certification comes with that significant caveat. So, what is the verdict on HawkEye 360 Incorporated? They are clearly in hyper-growth mode, with revenues more than doubling and a massive IPO that secured significant capital. The acquisition of Ease looks promising for expanding their capabilities. However, they are still losing money and their costs are rising significantly, especially with the added expenses of being a public company and the integration of Ease. The major concern I'm watching is those identified material weaknesses in their internal financial controls. Fixing those will be critical for restoring investor confidence and ensuring accurate financial reporting. My biggest concern is whether they can manage this rapid growth without skimping on critical internal controls, which could lead to bigger problems down the line. What I am actually looking for is their next quarterly report to see if they have made progress on those internal control issues. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord community linked in the description.